we were remarking and impressed that Bitcoin had been much more stable. It was in the 17,500 to 23,000 range. It had been more stable than the equity markets and the bond markets. And we thought, wow, that could be a leading indicator. Maybe Bitcoin's going to be a leader in the next bull market. And then, of course, early in November, FTX went bankrupt.
Cathie Wood from ARK Invest gave her thoughts on the crypto market, and she's extremely bullish on what she believes can be the greatest bull run in crypto history. She mentions that despite the volatility in the global markets, she's very impressed with the stability and fight Bitcoin has given during this bear market. She believes that we're still extremely early and that we haven't even scratched the surface on the potential of what's to come for Bitcoin and the crypto markets in the future. Here's more of what Cathie had to say.
If you looked at a chart of Bitcoin, as many technicians have from the beginning of this year, they've basically said this thing's going back to 10 to 12,000. That's where it has support. It doesn't have much support between here and there. Well, guess what? It stopped at 15.5 and it is now around 17. So it has withstood a massive amount of uncertainty in terms of what's going on in the crypto market. And one of the things we have been impressed by is how the Bitcoin blockchain and Ethereum, neither one of them skipped a beat in terms of operations. No transactions interrupted at all. If you think back, if you were in the markets in 2008, 2009, the markets froze. Banks stopped processing. They didn't know where the counterparty risk was, and the absence of information, the absence of transparency, just the market froze and the Fed had to come in. It was a near-death experience for the global financial system. Well, it has not been a near-death experience for crypto. And it's highlighting how important transparency is. We can see every transaction on the network by IP address. We can follow the money by IP address. And the decentralization of the network is also paramount. You know, it was very interesting that Sam Bankman-Fried never liked Bitcoin. Well, it's becoming obvious to me now that I know he never liked it, why he didn't like it. It's because it's not centralized. There's no way to control it, like he was controlling his empire. So it highlights this, the dual nature, decentralization, transparency, and regulators are beginning to understand this. The newest SEC commissioner, Jaime Lizarraga, still getting used to his name, he highlighted how important decentralization and transparency are, and a lesson learned from this crisis. And so from a regulatory point of view, the focus on those two variables could be very good for the crypto asset ecosystem. And then just to put into perspective the fallout from crypto, at its peak, the crypto asset ecosystem, all of it, I think there are more than 10,000 crypto assets. Most of them, or many of them, will not be worth much. The entire crypto asset ecosystem hit somewhere between $2.9 and $3 trillion. It's now down to roughly $800 billion. Now, put that in context. Apple is a $2.3 trillion company, one stock. So that just gives you a sense of how early we are still, and how unlikely it is that what has happened in crypto could cause a systemic financial crisis. Now, we probably are going to see more fallout, and we think we can dimension it. One of the ones I think we have a lot of facts on this. DCG, Digital Currency Group, owns Genesis, and it may have borrowed roughly $1 billion from Genesis. So $1 billion, it could be between $1 and $2 billion. Now, to give you a sense of that, the Lehman Brothers bankruptcy claims were $1.2 trillion. So we're not talking anything like that. We are talking counterparty risk, again, shades or echoes of that crisis. Reinforcing this idea is with transparency, you will have a much better understanding of counterparty risk. With decentralization, the counterparty risk should be lessened. Closed ecosystems are not a wise idea, and human-driven decisions, especially in a moment of a crisis, as opposed to smart contract automated decisions, also tend to be, if not irrational, then in the case of Sam Bankman-Fried and FTX, possibly fraudulent. I think every time we go through a battle test of the crypto asset ecosystem, I feel better. I feel better. If you look at the trajectory of Bitcoin, while the swings are wild, as Jeremy Siegel said on our podcast yesterday, he doesn't think there has ever been an asset where more people have made so much money, even after these losses, in such a short period of time, 12 to 13 years. So our conviction is as high as ever. And you will see from our Bitcoin Monthly, which will be out on Monday, how our on-chain analytics look even after this battle test. The outlook is positive based on on-chain analytics that show massive capitulation that we typically see only at bottoms. And that's why we're so impressed. We didn't get back down to 10 to 12,000. You know, a lot of the traders and hedge funds involved in crypto just look at the charts and press and press and press and press until they get what they want and get what they believe will happen. Well, that didn't happen. Now, I'm not saying it won't, but I think the odds have gone down quite dramatically, and truly impressed at the relative stability, especially in Bitcoin and Ether to some extent. Just let me leave you with one thought and hope. This is the hope. And based on our research, I think this is really possible. So if you look back to the last time we had multiple innovation platforms evolving at the same time, telephone, electricity, and the automobile in the early 1900s. What you found is we were at a period very similar to where we have been very recently. There was a pandemic, the Spanish flu. There was a war, World War I. Now, both of those were much more serious than what we've experienced this go around. We are an echo of that. Inflation hit 24% in June of 2020. And by June of 2021, it was down to minus 15%. And now, as Jeremy Siegel reminded me, we were on the gold standard then. So they needed to try and get prices back to where they were before the pandemic and war. But the echo here is money growth is falling, just like it was then. So we believe that the drama there, that 24% to minus 15% in inflation from 20 to 21, that we will see something akin to that, an echo of that this time around. So we got to 8, depending on the measure, 8 to 10% inflation here in the United States. Europe's at 10% right now. And we would not be surprised and agree with Jeremy Siegel that we could slice through 2% at some point next year. Commodity prices are already pointing in that direction. Massive discounts over Christmas because of overwhelming inventories are pointing in that direction. And so I'll just say one last thing. When we first moved to St. Petersburg, it was about a year ago, and I remember walking out around the park to go take a walk, and I ran into a woman named Cheryl. I think her name was Cheryl, could have been Shirley. She was on her bike, she had a little dog, and she recognized me and ARK, knew all about ARK, read our research. And I think, and she pulled up her app with, our portfolios. And again, about a year ago, and this is as tough a year as I've ever had. This is worse than 0809 by far. And I think of her every day. And I think of all of our clients every day. And I know that patience will win out. And I'm not sure if Cheryl is still in our funds, but know that I take these things very seriously. But I also know that we cannot pivot from our style. Style drift in our business is suicide. And our focus is exclusively on disruptive innovation. We would not hedge with energy stocks. The energy index is at an all-time high despite oil prices falling from 130 to 80. That makes no sense. But we're seeing a lot of people drift, even if they have ESG mandates. So we will not drift. And we know that our research is pointing us in the right direction. If anything, in the last year, our conviction in our research has increased because the artificial intelligence breakthroughs that we were expecting 5 years from now, maybe even 10 years from now, are happening now. GPT-3 chat GPT-3, it's mind-blowing. So I think truth will win out, patience will win. And we're looking forward to more in the know videos, sharing our insights and thoughts in the new year. And by which time, at some point, we expect the pivot to have taken place.